Originally known as Dallas Postal Credit Union, Neighborhood Credit Union opens its doors in April of 1930. We just celebrated 92 years of service. In 2001, the credit union officially changed its name to Neighborhood Credit Union. We now serve more than 56,000 members with assets over $1 billion. Neighborhood credit unions' ongoing effort to offer members convenient services in their communities and mobile access wherever they go has made us a top rated credit union in the Dallas Fort Worth area. Now I'm going to hand it back over so we can get started. Thank you.
Thank you so much, Charlotte, for sharing all that wonderful backstory about the credit union. And again, like I mentioned earlier, we have a special guest, which I'm so excited to have him on today. So I'm just going to pass it over to Frank so he can introduce himself and tell everybody what he does here at Neighborhood Credit Union. Frank?
Awesome. Thank you, Alta, for that warm introduction and the rest of the BD team. Y'all really amazing and do a great job here at Neighborhood. Well, I just wanted to just take a quick second. I'm actually one of the loan officers here at Neighborhood Credit Union. I am part of a gigantic lending team that looks to help everybody and members' needs. One of the things we're going to go over is buying a car today, so they're going to go into very much deeper detail. But there's a big part of that has to do with financing. That is one of the ones we help you save money. But it doesn't just stop there. There's going to be a lot more we're going to answer later that we can help you save money, not only in the financing, but also in what you're purchasing and how to articulate a good deal when buying a car. Awesome. Wait, a little bit more.
Excellent. No, excellent. That was excellent, Frank. I really appreciate you joining us today. I couldn't find my unmute button, so so my apology for that pause. But you will have more opportunities to hear from Frank here shortly. So let's dive on in. Okay. All right. So, when it comes to buying a car, people are often confused by some aspects of the process, which can often result in miscalculating the true cost of ownership. And did you know that currently over 7 million Americans are behind on their car payments? If that is you, then you're not alone, right? A lot more goes into the price of a car than just the listed price. In fact, the final purchase price of a car could be as much as 10% more than the listed price when all the fees, the taxes, the payment arrangements are all calculated in. So today we will actually learn more about the hidden costs of buying a car and how to tell how much car you can afford and what different payment options are available to you. And considering the market right now with car purchases, this information we're going to share is vitally important to your financial well-being. So moving right along to our next slide, the true cost of owning a vehicle. So, what are some of these possible fees that you could have to pay besides just the cost of the vehicle itself? Well, those fees could include the APR, the annual percentage rate, right? Dealer fees when purchasing from a dealership. Title and registration fees, of course, from the local state. And then, of course, there's sales taxes, and then any add-ons that the dealership may charge you for. And add-ons could be, windows, automatic windows and doors, sunroofs, leathers, and things like that. I remember back in my day, my first car that I purchased, I had to roll the windows down. I don't know if y'all are as old as me, but do y'all remember those days when you had to roll your window down? Well, nowadays you can pay extra. So you just press that button. Now, you should also consider the cost of operating a vehicle. These include insurance, gas, maintenance costs, even possible depreciation. But these days, there could be appreciation to your car. Who knows? So, owning a car could certainly be expensive. A great way to make sure you get what you need when you buy a vehicle is to become more knowledgeable about the car buying process. And being informed may help you get the best deal and save you money from being overwhelmed or even surprised when you start shopping. So, this is what we're going to work on today. Now, moving along to our next slide. First, it's important to understand the difference between what you need in a vehicle, or what we like to call our must haves, versus what you want in a vehicle. And that's what we call the nice to haves. So, your must haves are features that you cannot do without. And these must haves should be determined by your individual need. So, for example, if you're the type of person that has to drive very far for work, or just likes to travel a lot, fuel efficiency and good gas mileage is a must have for you. And considering the way gas prices are right now, this is should be probably at the top of everybody's list, right? Another must have could be vehicle safety reviews, a good quality of the car. For example, when I was last shopping for a car, I wanted something that had the correct type of safety features when it came to car seats. Since I did have two little ones that were in car seats, I wanted to make sure they had the correct harnesses to lock in those car seats in place. If I perhaps got into an accident, that I knew that the babies were very safe. So nice to haves, on the other hand, include the features like your make and model, the color, and any additional add-ons like Bluetooth or GPS, or even like backup cameras. And I know for myself, my depth perception is not very good, so I like those 360 cameras to make sure I'm not running into anything. Now, in our participants guide on page 3, you can actually take an inventory of personal must haves versus nice to haves at your convenience. So now that you kind of have somewhat of an introduction and understanding on what to focus on when you're shopping for a car, let's talk about the actual cost of buying and owning a car. And this information will help you create your own budget. So on the next slide, the first thing we'll look at is the cost of just purchasing a car. Here's what happens to many people, okay? You see a car, it's being advertised for a certain price, and you think, that sounds like a really good deal. Car dealers may advertise, for example, a discount off of the MSRP, which is the manufacturer's suggested retail price, or even a rebate, which is like a cash back on your purchase. And you might think, wow, that is such a good deal. I should get down to that salesperson today. Well, this is actually a great advertising technique because it gets people to meet with you, to meet with that salesperson right away. But it does not tell the full story. You see, that advertised price is not what the vehicle will cost you at the end of the sale. And many additional charges, what is sometimes like we call the fine print, right, are added at the end. So when you buy a new car, there are many extras that go into that final price. And that could be the dealer fees, sales taxes, and then, of course, the local registration, DMV, or even title fees or transfer fees. You may even be charged administration fees, filing fees, documentation fees. All of these are extra that the dealer and the manufacturer may charge to cover their own costs. So while you may think you're buying a car for $18,999 because that's what the advertised price got your attention, the car may wind up costing $20,000 once all the additional charges and the fees are added in. So if you don't pay cash for a car up front, you'll need to get financing from a dealership or a loan from a financial institution. And each month, of course, you'll have to pay that financial institution or servicer a portion of the total cost of the vehicle, plus any interest and fees they charge for providing the loan or financing contract. And we'll go into auto loans in more detail later in the course. What's important right now is that you also need to consider the cost of getting a loan or financing a car when you determine how much car you can actually afford. So, just to give you an idea of what you could be paying a month for a car payment, according to Experience State of the Automotive Finance Market Report of 2018, the average monthly car payment was $500. So that's $500 when you finance a car. But there's more. Don't forget about all the costs of owning a car. So on the next slide, some of those costs that go into owning a car are obvious. You're going to need gas or electricity to operate your car. Every year, you need to renew your car's um, registration with the state. And then there are basic maintenance fees for your car. You may need an oil change every month, every few months, that is, tire rotations, new tires, filter changes, general repairs. The most affordable vehicles are small sedans, and the most expensive are pickup trucks. Electric vehicles have the lowest annual maintenance and repair costs of all vehicle classes, and they have very low fuel costs. I myself have even considered an electric car every time I pump gas. I mean, if you haven't noticed lately, we're paying a good $25 to $30 more just to fill up our tank these days. If we focus simply on out of pocket costs, the average yearly cost for maintenance repair is about $1,186, and the average yearly fuel cost is $1,500. So this comes up to about $2,686, which works out to cost an average of $225 per month. And some of y'all might be saying, I'm paying more than that. So, and then there's also auto insurance, right? Car insurance rates vary by company, state, driving record, policy, and of course, the vehicle that's insured. But most statistics list the average monthly insurance car payment as being about $100. But I feel in Texas we pay closer to $300 a month. In many states, though, you are required to show proof of insurance, of course, on that car before you're allowed to even drive it. So, in many situations, this is a must have. So, now that we have reviewed the average cost of owning a car, let's add them all up. How much does it cost per month? Well, on our next slide, you can see once we put it all together, it could be close to $825. So, that is a lot. And you got to remember, you may not have to pay that amount. We'll discuss some strategies for lowering your payments. But first, feel free at your convenience to check out on page 4 of the participants guide the cost of buying and owning a vehicle as an additional resource for you. So, moving along to your budget, if you know you can spend about $800 a month on all the expenses related to your car, and your current car insurance payment is $100, while maintenance and fuel is roughly $225, you can assume that you'll be able to spend approximately $475 on your monthly car payment. Of course, your car insurance and other expenses may change, especially if you get a car that is different from your current car, but you can use these figures just to give you a basic idea. Okay. And now that we have a little bit of a better understanding of what you need in a vehicle and what you can afford, now we get to the fun part. Let's discuss various ways to pay for it, right? So, on our next slide, we're going to discuss briefly and go over some of our options. So we've included additional resource for you on page 7 of your participants guide, but right now I'm just going to go over the basics, okay? So cash, if you're able to, using cash is a great way to purchase a car. This way the car is paid up front and ownership is immediate. For most of us right now, buying a car cash is just not an option, especially with the rising cost of inflation. Just paying our bills, buying groceries, and getting gas is, for some of us, almost unaffordable. The next option is direct lending. And this is when you get a loan from a financial institution like your personal bank or even a credit union. And the great thing about this is you get an approval for the loan amount before you even start shopping for the car. And that may give you a better idea of what you can afford. The second option is dealership financing. And although it's very convenient, you can do it right on site at the dealership when you're picking out a car. Um, there may be a downside to that, and we'll discuss that in a little bit more detail shortly. And then, of course, there's leasing. Leasing a car is more like renting than buying. You don't own the car, so you can't sell it. And there are oftentimes rules associated with that lease. Now, generally, the less you need to borrow, the lower your monthly payment will be. And there are two ways to reduce the amount you need to borrow. You can make a down payment or trade in another vehicle, or you can do both. And a down payment is cash you pay upfront towards the overall cost of the car. The more you can pay in cash, the less you'll have to pay overall. And some lenders will actually require that you pay a percentage of the sale price right up front. A few years ago, this was about 20% down, as much as that. Now, required down payments are as low as 9%, and some lenders don't even require down payment at all. Now, a trade in is when you offer your old car as part of your down payment. You can research the trade in value, sometimes referred to as actual cash value, through a variety of online resources. And these days, I've even heard stories of where your car value has appreciated and you're actually able to get more for the value of your car than you would have in past years. So what if you still owe a lender for your current vehicle? Can you trade it in? That's a great question. Well, yes, but it's best if you owe less on that vehicle than it's worth. Okay. Now, I have a short video that I would like to share with you all from WFAA News Channel 8. So, Roxanne is going to help me with loading this video for you all. And then afterwards, we're going to hear a little bit from Frank in regards to the topics discussed. So thank you, Roxanne.
It is the most watched episode of Right on the Money I've ever done. The recent installment where we talked about the crazy car market. Unfortunately, I had to experience it firsthand. I told you about how I had to practically force checks into the hands of dealerships because I already had financing, but they wanted me to use their lenders because dealers could make extra money at my expense by adding to the interest rate that their lenders charged. I told you about this issue and where you can file a complaint if you experience it. I wasn't sure how until I saw the WFAA article one person wrote to the Texas Office of Consumer Credit Commissioner, which has gotten dozens of complaints now about this practice since I brought it to their attention and yours more than a month ago. Here are some more snippets from car shoppers complaining to the state about forced financing at the dealership. They actually told a client in front of us to leave because they had their own financing. I was turned down as a veteran with an approval from Navy Federal Credit Union. The manager stated that it would allow him to make more money on the back end. Even with an offer of cash, they would not sell me the car. The interest rate was about 2.5% higher, but I needed a car quickly, so I agreed. The sales manager told me directly, if you choose to go with the credit union, this will change the price of the vehicle. And there's more. I handed them a check from my credit union for $50,000. The salesman stated at this time they were not accepting financing from credit unions. How is a business able to force a customer to use their financing, one asked. And then finally one said, when I asked why, he said because the owner can do what they want. In this particular scenario, they kind of can. As I previously reported, there isn't a specific Texas law to stop dealers from refusing outside financing, but all of these complaints are now being investigated. State regulators who previously told me they are concerned about this practice told me last week that they are continuing to monitor this issue, and they highly encourage consumers who've experienced dealers denying outside financing to contact them. I have all the ways you can do that. It's in today's post at Jason Wheeler TV on Facebook and Twitter, and more stories to come on this as we make sure everyone is right on the money.
Okay. Thank you so much, Roxanne, for sharing that video with us. And I'm just going to hand it over to Frank because, in just a few conversations I've had with him, he's experienced some similar issues happening in the market. And so I thought that this was just such a timely article. So, Frank, please share, any information you have.
That is no problem. I know all of us feel a little uncomfortable after watching that video because it is a harsh reality right now we're dealing in the financing world when purchasing a car, as well as with cash. As you can see in this video, they're refusing cash offers. Well, a lot of things that I'm running into as a loan officer is when people go to these dealerships, um, they are being refused outside financing, and the way they shield it to where it sounds like they're not is they're asking for direct cashier's checks, and they don't send us the title. Now that's a whole nother back office thing, but what that does, that puts the credit union as well as the member at a complete risk. And so they know we can't fulfill that promise and getting the financing done because they're not doing their part as the dealership. So it's kind of a way to stay out of doing business with us because we're not doing it their way, which is not the right way. To be perfectly honest with financing world, it's not the right way. But here's the thing: just like that dealership has a choice not to use us as financing, you as a consumer have the choice not to deal with that dealership. They practice very predatory lending. They love when you go in there, I need to have this car, I want this car. The great thing about the market, even with used cars being a little bit harder to find, there's still another car out there that might fit the description of what you're needing. And if you have to change the color, you have to change something small about it to save a few $1,000s, as well as get someplace that's willing to work with you, especially when you're dealing with the credit union, that is worth the wait. Rather than jump into a deal, they add, I mean, I've seen deals as high as $8,000 in add ons, mixed in from the front and mixed in from the back end. It is a very difficult thing to refinance, considering that there's so much over the loan to value that it makes it almost impossible for somebody like me or the credit union to flip that. So we'd rather do the deal from the get go to make sure that you're protected in all facets of the loan. Well, one of the ways we do that is negotiating interest rate. Just like every other place, we have tiers. Everybody has tiers, but we're also your credit union. So if they're throwing out numbers your way to take that deal away and they want to run your credit, let us know. We will be glad to send it right back to these underwriters and go, hey, look, they want to take this deal. This is what they're offering. Can we do anything? And a good handful of times, our underwriters are willing to work with you to make sure your business stays with us and keep you out of that dealership tango, is what I like to call it. The other thing too is back end. I am actually 100% for you protecting your vehicle. In fact, I think you should. If you plan on keeping this vehicle for a long time with the gas prices, the cost of cars going up, you're going to want to keep the vehicle you're financing for an extended period of time. Well, when that manufacturer's warranty runs out, you're going to need an extended warranty. They take advantage of that as well. You go in and buy a Lexus. It is a Toyota product. People don't realize that. Sister company of Lexus is Toyota. The parts don't cost any more. But they will harp on the fact that it's a luxury vehicle and tell you, hey, this warranty is going to cost you $4,000, 60 months, 75,000 miles. Hey, you're going to need it. And they're right. You are going to need it, but you don't need to buy it from them. So with us, we go very little over cost because one reason, you're our members. We're not looking to make money from you, or at least not just barely enough to that way we can just keep this credit union afloat. That's what we want to do. We want to make sure y'all get the best rates, the best deals by giving you the most affordable coverage in that. And that also includes premium terms. We can work with our lender neighborhood to make sure that you're getting the most exclusive term that we have to offer. So that way you kind of have your cake and eat it too with protecting your vehicle. Whereas they're going to try to edge up that money as much as possible because the more they charge you for it, the more money they put in their pocket, and the more that greedy dealership is going to be like, hey, you're the best salesman we have. Whereas here, the more we save you, the more we're going to feel comfortable that you're walking away with the best deal. So there's many different tactics that you can take when purchasing a car. One of the many things is don't fall for the market increase. A lot of times they'll say, due to the market, this is priced over. We have an evaluator here within neighborhood that can tell you what is based on the market right now. It already knows what this car should cost. So whenever you're having that doubt and it throws something out to you like, well, it should cost this much because of where we're at in the market. If I plug it in and it's still saying it's 4,000 over, it's 4,000 over what the market is charging for it, not 4,000 over, because they basically put 4,000 over because that's what they want to do. They want to do that to you. So you don't have to buy that car. And you can call them on their bluff and say, "Hey, look, we know that this car is worth this much based on the current market. So you don't have to buy that car, or you don't have to commit to one dealership." The trick is, don't let them run your credit. You can go to multiple dealerships and you don't have to run your credit. Your focus should always be the purchase price of that vehicle first. And they will ask you, it's a very common salesman technique, what payment are you looking for? That is a trap. It's a complete trap for you, because now they're getting you to talk about your payment rather than how much you truly want to save on the purchase of this vehicle. Because dealerships have this leeway to start from 60 months all the way to 84 months on older vehicles. You don't want to put an older vehicle on 84 months because they're going to stack it with other things to make it almost, once again, impossible to refinance, because now you got comfortable with a lower payment because they extended it so far. So they kind of put you in a position where, well, right now in my current situation, I can only afford this payment. Mine may have only went up $20, but what if I saved you 2 years? To a normal person, obviously that sounds good, but in today's market, $20 can be the difference of being able to get gas or buying food. So we understand. Come to us first. We will orchestrate a good loan for you from the get-go rather than putting you into the dealership financing. The other thing that I like to go over is, when they try to do add-ons such as rebates and things like that. We understand when you're buying a new car, sometimes there's a $2,500 rebate, $1,000 rebate when you finance through, say, a Chevy, and they offer through GM Financial, Hyundai, Kia, etc. When you're going through their financial institution for the car you're buying that's new, there are incentives. I am not telling you as a consumer to waive those incentives because of outside financing. But the trick is, get the car with nothing on it. Don't accept the gap. Don't accept the warranty. Don't accept any of these things. Just simply the additional rebate. Guess what I'm going to do in 2 weeks? I'm going to refinance it. You get to keep your rebates. You get to keep all the incentives. And you get the lower rate that we offer here at the credit union and pay just a minimal amount of interest to get it out of there. They will lie to you and tell you have to wait 6 months. The reason you wait 6 months is because there's commissions associated with the sale. They want to ensure that they don't get backlogged on those commissions and it gets reverts back to them. But at the end of the day, some people feel bad for the salesman. Don't. They have hundreds of people they do this to a month. It's you're not taking anything from them. The only concern should be yourself and is how much money you save. Because guess what? To the credit union, you're the most important person, not the dealership. Okay. But that's really all I have as far as regard to car financing. But I will be dropping my information in the chat, so feel free, give me a call, shoot me an email if you have any questions. I'm here to help y'all. Also, I saved this bit for the last. I talked with my manager. We do have a current promo that was issued out by email to people, but because I'm doing a webinar, I am offering right now, we can do 2% off any qualifying rates on a refinance or a purchase. So anybody that's in the market for a car at the moment, or just has that uh, kind of just need to save a little bit of money, because I know most people are actually paying on a high car note and they would love to keep their car, but it's just expensive. That's what I'm here for. So you can take advantage of that offer to the, I believe, August 31st. Now, normally that just went out to a select email group. I'm extending this out to anybody on the call or anybody that you have family or friends. Just be sure that they give me a call. Awesome. But that's all I have for today. So I will be sending that info
Wow,
now.
Frank. Thank you so much. I just
My
only
pleasure.
wish I had you around when I was fell victim to many predatory lenders in the past. Had I known these golden nuggets, I would have saved myself a lot of heartache and trouble. So yes, please put your information in that chat box. for our attendees today and your promo code as well. So everyone knows that they can take advantage of that 2% off. And we're going to get right back into our webinar. And I'll give Roxanne just a second to get that all squared away for us. Okay, thank you so much, Roxanne. So we briefly talked before again about the different ways to finance and the down payments. And now I just want to hit on something that's really important. It's your credit worthiness. This is how lenders actually do determine how likely you are to pay back a loan. It is based on many factors such as credit history, how you've paid back loans in the past. They do collect information from the credit bureaus, which is put into a credit report, and that's how they determine your credit score. And lenders may look at your credit score when they are deciding whether to offer you a loan. And if so, what interest rates they're going to charge you. If you have a lower credit score, lenders may refuse to lend you money, or they may even charge you higher interest rates. And then on the other hand, if you have excellent credit, you may be able to negotiate lower interest rates. Generally, the lower your interest rate, the less money you'll have to pay the lender overall. Now, since the information on your credit report is what's used for lenders to determine some loan terms, it's very important that you know what's on it, okay? And you're legally entitled to receive a free credit report from each of the 3 credit bureaus every year. And you can order them online or even over the phone. And we've put resources on page 8 of your participants guide for you to be able to find out more information about doing so. And moving right along to our next slide, lenders may use information on your credit report to help calculate your debt to income ratio, which is your DTI. And Frank did mention this earlier and how important that was. The DTI ratio gives lenders an idea of your current debt situation and your capacity to take on more debt based on your income. So to figure out your current debt to income ratio, you can add up how much you pay per month for your current debts, mortgages, student loans, credit card debt, and then you just divide that number by your gross monthly income or your income before taxes are taken out. And so there's just a simple formula to help you discover what your current DTI is. So when you're comparing different loans, it's important to evaluate how much you'll be charged by the lender for taking on the loan. And to do this, you want to look at the interest rate and the APR, okay? Calculating auto loan interest can sometimes be a bit complicated as it follows kind of a complex formula. Fortunately, there are many free calculators available online that will help you figure it out. And to give you an idea of why interest is so important, we can look at an example on our next slide. So in this example, Thomas just bought a car for $25,000 at an APR of 6% for a loan term of 4 years. And this is a fairly common example, okay? So when he input this information into like an interest calculator for the rate, he learned he would be paying a total of $28,182.03 at the end of the 4 years. So that amounts to $3,182.03 paid to his lender just for giving him the loan. So you can imagine Thomas was disappointed to learn this, but it was too late. He had already signed the contract. So when you're paying thousands more in interest, comparing APR or interest rates becomes very important. And that's why it's good to have a resource like Frank to help you uncover these things. You know, it's nice to have someone go to bat for you. On the next slide, I have another example that I'd like to share with you. So Thomas has a pretty decent credit history and his credit score is near 700. He has a friend, Sari, on the other hand, who has excellent credit, which is what we're all striving for, right? With this credit score, it was roughly over 800. So Even though her credit score was much higher than Thomas's, the dealership offered her the same financing terms with an APR of 6%. So she knew she could do better. So she negotiated with the dealer and was able to reduce some of the financing fees and interest, and she got her APR down to 4%. Again, reiterating what Frank was talking about, that negotiating of the rates. For the exact same car over the same loan term, Sari will pay over $1,000 less than Thomas, all because she has good credit and she negotiated terms with the dealer. Okay, so that is why it's really important to understand that you have that negotiating power. So moving right along to comparing loan terms and interest rates, in the next example, you can see loan A and loan B are for the same amount, but we've switched the APR and loan term. So which loan do you think is going to be less expensive? Well, if you check out our next slide, you'll notice there's no difference. So if you guess that, then you're right. Loan A has a lower APR, but the extra 2 years on the life of the loan causes more interest to accrue, making it cost more. So this is why it's just as important to look at the loan term as it is the APR. Okay? So I want to briefly discuss the 24/10 rule, which is a great tool to utilize. It's a convenient way to help you determine if you can actually afford a particular vehicle when you begin shopping around. It may not address every person's financial situation, but some may find it to be a helpful budgeting tool. And here's what this rule states. Number one, you should make a down payment of at least 20%. Number two, you should plan to finance a vehicle for no more than 4 years. And third, your total monthly car payment, that includes principal plus your interest, plus car insurance, should not equal more than 10% of your gross monthly income. The first part of this rule says to make a down payment of 20%. You can apply this rule in two different ways. First, if you know how much you can put down on a vehicle, you can figure out how much you can spend on the purchase in total. Or if you already have a car in mind, you can figure out how much you'll need to put down based on the listed price. So in the next slide, we are going to look at an example. Lane knows she can put $500 cash towards a down payment for a new car, and her old car has a trade-in value of $2,500. So that's a total of $3,000. If we divide that $3,000 by 20%, we get $15,000. That's how much Lane can afford based on the down payment rule. But Lane's dream car costs much more than that. And I'm sure many of our dream cars cost way more than that. So it's listed at $32,000. To afford this, Lane would need to put down $6,400. That means Lane will need to save about $4,000 more or settle for a car that isn't her dream car. Lane can do a little more research maybe to see if her dream car is even in her budget by even calculating what she can afford in monthly payments. With a gross monthly income of $5,000, she shouldn't spend more than $500 on her monthly vehicle expenses. And sometimes just knowing these vital things using these formulas can really keep you out of a bind financially. All right, so when you're ready to buy a vehicle, you should be prepared to put some work in. First, you'll have to do that research, right? Um, which looks different which means looking into different vehicles that might be within your price range altogether. Second, you'll need to research again your financing options. Third, you'll need to do some negotiating. okay, with dealers or lenders. And finally, you'll have to ensure that you're making the right decision before you even sign that contract. Sure, all this research and shopping around takes a lot of time, it takes a lot of effort, but it could potentially save you thousands of dollars. So in that case, it would be worth it. And we've included some helpful tips for you when you are ready to buy in your participants guide on page 9. But I'll go through these tips now. So again, researching your options, first and foremost, shopping around, and then thirdly, negotiating. Okay. Um, and I want to briefly talk about examining the contract because it would be a shame to go through all the work of shopping around and negotiating the best deals only to have the contract state something different from what you expected. So, this is a very important part of your process, having a good understanding of what your contract states. And then after you've signed that contract and you've been handed over the keys to the car, you need to be sure you pay your loan back. If I don't say anything more important right now, it would be this: paying that loan back. Let's close this course by discussing some important information about car payments, okay? First, be careful about paying your loan off early. It's a it's always good to pay down your debts, but you need to be smart about doing so, okay? Remember, the longer the life of your loan, the more money the lender makes in the deal. So it's in their best interest to keep you in a loan as long as possible. So for this reason, many lenders will add on a prepayment penalty to their contracts. So you check your contracts to see if paying off your loan early will result in a prepayment penalty. I've been in that situation. So, also, if you want to pay more towards the loan, then your amortized pre-calculated monthly amount, make sure that the extra payment is applied to the principal of that loan, not the interest, as lowering your principal will reduce the amount used to calculate your interest going forward. And most importantly, again, pay your bills on time. Late payments can be noted on your credit report, and that may affect your credit score. Seriously late payments could lead your lender to sell your loan to a collection agency, which will further impact your credit. So, late payments could also lead to your car being repossessed. And not paying your bills on time can have heavy financial and legal ramifications. So, if you have any concern about your ability to stick to the payment terms on that loan, you may want to reconsider that particular purchase. Okay. So, in conclusion, today you've learned a little bit of the following: understanding the car buying process, especially when it comes to negotiations and financing, and it can help you save money and prepare you to enter into a contractual agreement with a lender or dealer. And be sure to evaluate your needs and learn more about your own creditworthiness before shopping around for the best offers. The more information you have, the easier it will be to negotiate, right? Purchasing a vehicle is a very big investment. The extra effort and the time that you take to prepare could save you thousands of dollars and, more than anything, a lot of headaches. So I want to thank you so much again for joining us today on our webinar. And Frank, thanks again. Please remind the people about your promo and your information in the chat box, so they will know how to contact you. Okay, and then we will close it out here shortly.
All right, thank y'all for having me. Y'all have a wonderful day. And I think I did put it in the chat box. It should already be in there. I hope to hear from all of y'all soon. Y'all have a wonderful, wonderful day.
Okay, thanks again. And I'm going to go ahead and stop the recording now.